Hello traders, Gary Wagner here, approximately 11:52 in Honolulu, 4:52 in New York on Friday. Happy Aloha Friday, as we say on the island. It is the 17th day of December, 2021, and this is the daily report for gold and silver, our weekend review. Yesterday, gold surged, actually closing just below $1,800 per ounce. Today it opened at $1801.50, traded to a high of $1,815.70, but was unable to hold on to those net gains. Currently, we have gold futures, basis the most active February contract, fixed at $1,798.60. That is a 40-cent increase when compared to yesterday. However, it did close slightly below its opening price and finished higher on the week. Silver futures also traded higher for the better part of the trading session, but it was dollar strength that took it lower, closing down by 12.5 cents, a decline of 0.56%, with the most active futures contract settling at $22.36. As you can see, it was dollar strength today that actually turned silver negative on the day and turned gold from being up over 1,800 to fix below that price. The dollar index surged 0.66% and is currently fixed at 96.645. This first chart that we are looking at is a short-term 5-minute line chart with the dollar in green and gold in gold. And what it clearly illustrates is the sizable move that gold had. These are the highs up at around $1,815. And at that time, there was pretty much neutrality in the dollar, swinging in a narrow range. However, when the dollar began to move up, which is right here, you can see that that matches pretty much precisely when gold started to come off of the highs here and actually track lower, giving back approximately $15 as we saw the surge in the dollar. This is a weekly candlestick chart of gold futures, and what we can see by this single candle is that even though gold had only fractional gains today, it did close higher on the week. We are looking at a daily candlestick chart of gold, and there's a couple of things that I think are important features to point out. First of all, the high that came in roughly at $1,815.20. Historically speaking, it does match this high when we were in a congestion area. It also matches this high that came in on the 25th of October. So there is some data that can suggest that this is a major resistance area right now, $1,815. The single candlestick that came in can be identified now as a shooting star. That's this candle here. It is a quite different reaction than we saw following the surge in gold prices during the last FOMC meeting, although we had very similar day after effects, both of them surging near 1,800 and here near 1,800 on the high. But on the second day, it was completely different. And I think a lot of that has to do really with the strength of the US dollar. That surge took away all of the juice that we had occurring in gold and silver through the morning session in New York. This next chart we are looking at is a line chart of 5 minutes with gold on the top in a gold color and silver on the bottom in green. And what we can see or derive from this chart is that although both had nice surges to the upside, once that dollar got strong, we can see that it had an effect on both silver as well as gold. The last two charts I want to look at are both silver candlesticks, and this is a weekly chart. We can see that silver also closed higher on the week when we compare the open to the close, as well as taking a look at the low. This candlestick on a weekly chart can be identified as a hammer. However, when we convert that back into a daily chart, the candlestick that we are seeing can be identified as a doji because it opened and closed at the same price point. Because of the weekly bullish candlestick, the hammer, I'm not going to pay as much attention to the daily doji. I'm still pegging our current level of resistance at $23, and I'll round it up to 50 cents. That is the 78% Fibonacci retracement. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.